Ross Gerber, CEO at Gerber Kawasaki Wealth and Investment Management. Thank you so much for being with us at Negocios.
Thanks for having me.
Ross, I would like to ask you, we have just seen all this situation with the Federal Reserve and the Nvidia as well. I would like to ask you about the AI bubble. What are your expectations for Nvidia's earning, and how could they shape market perception of all this bubble?
Well, I don't look at any bubble here. Personally, I think valuations actually are pretty in line with what we would expect for the high growth we're seeing for businesses like Nvidia, and I would actually argue Nvidia is cheap at its current price relative to its future. And we're going to see a pretty good number from Nvidia, and I think that's kind of baked into the stock already. And we know from all the other big tech companies' earnings reports that they've spent a ton of money at Nvidia this quarter. So, I don't think people are that worried about the quarter or the short term with Nvidia. I think it's really about what does next year look like from companies and their spending on Nvidia chips, and whether or not they're going to be able to get into more markets like China.
Ross, do you think Nvidia is currently overvalued, or do fundamentals still justify its price?
We look at valuation from two perspectives. One is the price earnings ratio of Nvidia, and then compared to its growth rate. And right now, Nvidia actually trades at around 40 or 45 times its next 12 months of earnings. And that's actually in line with what Nvidia has always traded at. Now, keep in mind, I've owned this stock for over a decade. I know this company extremely well, and it's the top individual stock holding at my firm. And it's grown by enormous amounts over the last decade since we started investing in it. And so I think what people have to understand is Nvidia is the leader in AI chips by a far margin. None of the competitors are even close. And between the software that they run for AI, building AI systems and data centers, it's just the go-to place if you're building AI. And that's we're at the initial stages of the build out of AI, and we look at Nvidia as cheap relative to where we see Nvidia and what they should earn over the next 5 years.
Beyond Nvidia, which other tech companies could surprise this quarter, and why?
Well, we've already seen a lot of the earnings from many companies. The company that I'm most bullish on right now is Google. And Google reported a good quarter, but on top of the fact that Google is just in prime position to take advantage of the three main themes that we're super bullish on. One is autonomy with Waymo and driverless taxis, which they have mastered here in the United States, and eventually they'll roll it out globally. It's an incredible thing to take a taxi where no driver drives you around, and it drives better than humans now. And then they have YouTube, which has really become the #1 site for young people to watch television, and not just YouTube videos, but now traditional television, long and short form content, along as many young people just get their day-to-day TV from YouTube as well. And then you have AI with Gemini. And, the truth is Google knows the most about us and has been keeping good data about what is a trusted site and what are good sources of information for a long time. And so Google, in my mind, has the best source of information for AI. And with the team that they have there, they've pivoted very rapidly into going all in on AI. And now Gemini is as good of an AI LLM as any of the major ones like Chat or Perplexity. So Google's a player in all these great markets, and I think it's a wonderful company.
Ross, on the broader market, which with recent volatility, are we looking at a temporary correction, or are we at a deeper structural risks in the markets?
Well, as of now, it feels very much like a well-needed correction after many, many months of gains, and sort of felt, it starts to feel like, oh, we just make money every month. Isn't the stock market fun? And so this is a well-needed correction. I think the bigger issue in the United States is what the economy is going to look like in the first half of next year. And we're seeing a pretty good slowing of the economy because of the government shutdown, and consumer confidence is low. The presidential approval rate of Trump is continuing to drop as tariffs have really increased the cost of living, especially food for the average American. So many of the things that he was saying have actually become, pretty detrimental to the average American. So, we need to reverse many of the policies that Trump has implemented that has created inflation. And at the same respect, the Federal Reserve needs to really start lowering interest rates now. And there's some debate over whether the Fed should lower interest rates in December. And that's really what started the sell-off, because it's super clear that the Fed needs to be lowering rates, irrelevant of what the inflation numbers are. And so, Trump kind of put the Fed in a pickle, and I think they're going to continue to lower rates, and that'll ultimately support the markets. But if they don't, the market could go much lower. And so December is going to be a crucial Fed meeting. It's not life or death, but it's pretty crucial.
I would like to put the view in the Federal Reserve moves and policy. How does it affect to your outlook for growth in tech stocks?
Well, it's 100% affects my outlook, because, if the Fed isn't lowering rates aggressively going into the first half of next year, I think we're going to have a recession. So, that could bring stocks down substantially. We could see a 20% decline in the stock market if we go into a recession. And so we would have a full bear market in 26 if the Fed is not lowering rates. But at this point, it's very clear that they will be lowering rates over the next several meetings, not just in December. And I think, with the Federal Reserve Chair retiring in the early part of next year, that Trump is going to appoint people that are going to continue to lower rates aggressively. And that will actually really spur the economy, because residential and commercial real estate is pretty much dead in this country right now. It's gone. And so AI and other areas of growth have really picked up. But in general, to have a good economy, you need to have construction. And so it's time for the Fed to stop with these ridiculous rates and start letting Americans, buy homes again and fix their homes and things like that, because it's just too expensive to borrow right now.
Ross, especially also looking to Michael Burry and his hedge fund. Michael Burry has announced he is shutting down his hedge fund. What does this signal about his view of the current market?
I think it says more about his success as a hedge fund manager than his actual views. See, what most people don't understand is Michael Burry manages about $150 million, which is pretty close to the minimum for filing if you're an investment firm. And so a lot of the reason I think that he stopped filing is because his assets has fallen below where you're legally required to file. So he might as well just shut it down. And so it's really because he's not been successful. I was at dinner last night with my team, and there were 8 members of my team at the dinner, and all 8 of us manage more than 150 million each. So there was about $1 billion at the table yesterday. So it just puts into perspective that, it's not a lot of money that he manages, and he gets a lot of media for whatever reason. And I wouldn't take too much out of what he does.
And could moves like Burry's trigger a ripple effect among other funds or institutional investors?
I don't think so. I think that Burry did well like 20 years ago, and that's great, but that's been a long time since the Big Short. So I don't know how many institutional managers are following Michael Burry's trades, but I would suspect it's close to 0.
And Ross, if Burry is closing his fund due to the market concerns, what warnings, signs would you be watching for your clients?
As I said, what Michael Burry does is the least of my concerns. What we really follow is the markets themselves, the economy, and certainly we follow certain investors. And investors like Berkshire Hathaway and Warren Buffett recently adding Google to their portfolio is, I think, something that investors should be paying attention to. Warren Buffett and his team don't typically invest in technology stocks. So I think if they're investing in tech, then you should be investing in tech. And yes, they've been lowering their position in Apple, but it's only because they've made so much money in it. So I think if you look at the future today, it's one of the most exciting technology futures I've seen in many, many years. And every decade we have a technology theme in America that drives enormous amount of innovation and growth. And we know that what it is, and it's starting to happen now. And so I think this is actually a great time for investors to invest, and having a pullback in the market allows you to buy these companies cheaper.
Ross, as a last question, and going back to Nvidia, how do you think is going to act the market as soon as we know all the results tonight? And if Nvidia beats the expectation, it could push, obviously, the AI sector, right?
Yeah, but once again, I think it's all baked into the market, the more positive outlook for Nvidia. So I think Nvidia beats earnings tonight, and I don't think the market does anything. I think it'll just be like kind of happy that they didn't like have some disaster. But I just don't see that. So Nvidia is an extremely well-run company, and I think they set their expectations correctly in the markets. And so I don't actually foresee a great reaction in the markets for Nvidia because I think it's already priced in. If anything, we've seen sell-offs after earnings for no reason, and many good stocks that have reported great earnings. So, I don't think there's a lot of anticipation in Nvidia's earnings going into it because the market's been correcting and Nvidia's come back down a little bit. So, I think a good report will help stabilize the market, but most importantly, bring more comfort in people's mind of what's really happening in AI, because Nvidia is really the bellwether.
Ross Gerber, CEO at Gerber Kawasaki Wealth and Investment Management, thank you so much for being with us. It's been a pleasure to have you at Negocios Televisión.
Yeah, thanks for having me, and I appreciate you having me.